Hello and welcome to Leaders of Tomorrow, ET-Now's special initiative that celebrates the undying entrepreneurial spirit of micro, small and medium enterprises. Yesterday, we brought you part 1 of a special exclusive conversation with SBI. Today, here's part 2 of an interview I did earlier with B. Sriram, MD, Corporate Banking Group at SBI. Take a listen. I want to talk about the slew of primary market action that we are seeing on the part of MSMEs, SMEs, startups and e-commerce companies. In terms of valuations, as a banker, what are you reading of the valuations?
Valuations are, are generally forward-looking in the sense that, if there is a company, and most of the valuations are done on projections rather than on past performance. While past performance does give a comfort to the investor in some way, but I think most likely is the projected plans of the company, in what way the company is supposed to stand up and deliver over the next 2-3 years. And that is where I think there is a lot of talk and a lot of interest wherever the investor would like to invest in a certain company in terms of their future plans and how their market for their future plans is going to develop in the environment as such. So, this is a big portion of that, and where the valuations are likely to go higher is where in the interest in the sense of the investor, the market for the future is largely available for this sort of product. So, in that sense I think you need to plan a little bit ahead, and you have to plan and make sure the valuation is got for that particular discounting for those particular opportunities that are available.
Okay. So, would you be in favor of a separate regulatory framework and environment for MSMEs and entrepreneurs, like the government has set up, Skill India, and under that it is making finance, for example, available more easily to startups. Do you think, say, a legal framework which is separate for startups and MSMEs, a banking framework which is separate for MSMEs and entrepreneurs, do you think that makes sense?
I don't know whether it will address the problems that the MSMEs would face. You see, the point of MSMEs is there again, the cost of repetition is how their product or their business stands up in the present circumstance of competition. And the no amount of legal or regulatory issues could probably overturn that sort of concern. They could obviously be enablers in some way or the other, and all these are required to be given to them in some, but they cannot be the deciding factors for an MSME to be viable or to be successful. So, in that sense I think it's very important for the MSME to look at their business and try and make sure that their business is good.
You were talking previously about the kind of buffers that MSME should create on the balance sheet, but what is the one piece of advice you would have for our viewers in terms of how to A, create wealth, and B, be able to manage it better?
To create wealth is as I said, there will be good times for anybody. If you are looking at a horizon of say 20 years or something, there surely will be a 10-year 50% time where the things will look up and look good, and those times I think those are the times when you need to push rather than to, there are always, as I said, temptations to take it to unrelated areas, to diversify could be, and even to try and build capacities for the future. These are 3-4 things that the MSMEs do when they have times of where they have got good profits. And these decisions will have to be taken very, very carefully by them, whether you would like to sit on cash or whether you would like to go for expansion now, or any of the other things that I mentioned. Now, what they do is something that would depend on the circumstance, the product that they are looking at. If there is an opportunity for expansion, yes, in the related field in which they are doing, it makes sense. If there is a market and if there is supposed to be a forward-looking statement that there is going to be a demand for the product that they are doing, it's truly there. But then, as I said, it depends on whether you would like to do it, and then because the risks are going to be there always, and there will always be times when there are going to be times of stress, and that is where we as bankers do say that you try and look at about 6 months to 1 year of at least debt servicing to be put as cash, kept as cash in some way, not cash in the banks, but in cash that is easily in liquid security that are easily be encashable. Now, if that is available, so at least for a period of 6 months to 1 year, even if the worst of times, you will be able to tide over and look at a solution for yourself. But if you are tied up in the sense that you are extremely over leveraged and you continue to be over leveraged even in good times, that shows that there is a great weakness in that company. And so leverage is something that obviously we would like companies to be well within, and there are every bank has got standard norms of ratios for leverage which need to be adhered to, and most of the times you find that MSMEs don't do that. So these are things that they have to do it so that they have the fiscal discipline to run the company over a long period, over generations.
Fair enough. Even as the government has been putting its might behind increasing the ease of doing business, have you started sitting where you are, seeing a change as far as business confidence goes amongst companies?
It is starting to say it is not, as I said, that the manufacturing still requires a little bit of more thrust in some way. We are finding people who coming and discussing with us in terms of their project plans. But yes, we are still some time to go. In terms, as I said, the worst is not behind us, so not behind the banks as well. And in that sense, I think. Since as I said, most of the viability is determined by the demand for the product. I think there is capacity utilization in most industries only around 75%. There is still some supply to be improved before capacity additions will start to happen in most places.
Even as the government has undertaken a slew of measures to open up the economy in terms of FDI, the Prime Minister has gone as far as to say that India is now the most open economy in terms of FDI. Your own observation, your own comments in terms of how MSMEs can compete effectively against their larger peers when it comes to such investment?
No, I think FDI is also a solution for the MSME, in terms of people who like good running, good efficient MSMEs. I think there is an opportunity here to try and get some flows into their companies, get some cash, put their deep pockets deeper, and try and go into higher capacities which they were dreaming of. Now, this is one bottleneck which has been cleared by the government, and I think whether it is MSME or right across the value chain of the industry, I think everybody has an opportunity in it, and everybody needs to look at it positively and try and make sure that they leverage the benefits significantly to their advantage.
Earlier on in the show, you said that you expect that recovery in the economy will come back in about a year's time is what you're expecting. Do you expect that recovery of bad loans will get tied into that, or is it going to be, a longer time frame?
Now, these are two separate aspects. What I was mentioning was the project pipeline which had dried up 3-4 years ago will start to improve this year onwards because of the slew of measures that the government has been taking. And once that project pipeline starts to improve, whether it's in the area of heavy industries or elsewhere, right through the industry chain, you will find that everybody has an opportunity to improve their capacities in a significant way. So that portion will continue as we try and resolve some of the bad loans that we have in our books. So I don't think one is linked to the other in a very significant way. But yes, we have an issue of NPA resolutions on our hand, and we're sure that we'll find good resolutions for all of them.
Sure. So even as we were talking about MCLR and the impact on interest rates for the industry, SBI has been the pioneer when it comes to passing on the interest rate cuts on the part of the RBI. But at an industry level, are you happy with what is happening in terms of the pass through of the interest rate cut?
At the moment, more or less, I think as you say that our MCLR has been brought down to 915, and I think in terms of spreads over that, a lot of the companies which are better rated are hovering around the MCLR plus 50 basis points. So they are reasonably well priced in terms of the bank's strategy to pass the interest rate benefits to the customers. Some of the products where we have facing very little stress, like for example the home loan portfolio or the auto loan portfolio, I think they are also more or less around the MCLR range. So these are significant drops in interest rates, and as I said, as we go forward into the year, we will see as to how the interest rates pan out.
Let's take a very short break on this special interview then with B. Sriram, the MD of SBI. But don't go anywhere. We'll come back with much more on the other side. Welcome back. You're with us here on Leaders of Tomorrow on ET Now, and we're continuing this special interview with B. Sriram, the MD, Corporate Banking Group of SBI. Take a listen. I want to talk about your own international business, sir. Can you tell us, how that has been growing, what the plans are there?
Yeah, we have presence in about 37 countries, and we have 197 offices operating right across the globe. We are there in all continents. Actually, the last one we opened was a representative office in Brazil, Sao Paulo, and that makes us our presence in all continents today. We did open a new branch in Seoul, South Korea, and also we have a license now to open a branch in Myanmar. These are areas and opportunities that we find that we could have some significant business flowing from these countries and zones and regions. Our international book is actually about 18% of our total exposure today, and our plan is to try and make it between 20 and 25% the next 3 to 5 years. Profits also are almost proportionate, in the sense they also have about 16 to 18% profit coming out of the international book. Out of the assets of about 40 billion, we have close to 40%, is about 16 billion is on short-term trade-related advances. The balance 60%, half of it is from what we call India-based business, and half of it is the local credit that we have sourced. And this proportion of 50-50 is actually gone better for the local based business over the last couple of years compared to 60-40 earlier. So we find that that is an adequate ratio that is there. Earlier we used to look at opening branches where the Indian diaspora was higher, and also where the trade relationships between India and that other country was significant. Today what we are also looking at is to review each one of these branches and see as to in commercial parameters whether they have done justice to the part that they were supposed to play in such areas, and try and see whether a different model or different strategy could work. So typically we do open a representative office initially for a few years to find out whether there is enough scope for us to open a business, and then go on to opening a branch and then spreading the branches along the territory in which we operate. In some countries we have gone in a slightly bigger retail model. Generally we operate on a wholesale model internationally. In some countries we have gone on a retail model, and it has been a mixed success in these territories. Recently we will be, in the near future, we will be converting the London operations into a subsidiary. It's basically the retail side, and operate the wholesale banking through our own foreign offices.
I want to talk about fintech at this point. The government, of course, is going out, and even as it's talking about, say, Digital India, for example, it is also talking about financial inclusion and the role that will have to play for banks like yourself. How important is fintech from an industry point of view? What's the size you estimate it will become? And can you talk to our viewers about how you are incorporating it more into your own operations?
Fintech is a very significant portion of our life. Actually, if you see technology as such for the bank, has become a very, very important clog in the wheel, in the sense that today almost over 75% of our transactions are through the anytime channels, that is the alternate channels, either through ATM or internet banking or mobile or any of these other channels that is there. So from almost nothing a few years back, as I said, over 75% has migrated to this. and thereby there is a big opportunity for us in terms of 3-4 major areas. One is of course to grow business, in the sense that you can open accounts online, you can drive business, you can do transactions, you can use analytics to find out as to what product can be sold to whom, and then drive those sales through the technology itself. The second area is in terms of what we call risk mitigation. Now, significantly the way we have the amount of data we have and the amount of transactions that flow through the system, we are able to find patterns that could help us in preventing frauds, for example, or even giving us early warning signals or system to be introduced to make sure that we take corrective decision action significantly earlier than what we are now doing. So, in terms of risk mitigation, again it is a very significant portion. These are some of the examples that I am giving, but there is a big universe there. The third part is in terms of cost reduction. Today technology plays a phenomenal role in terms of reducing cost, not only by way of the cost of transaction, which is much lower as compared to a transaction which happens at the branch in a physical way, to a transaction that happens on a mobile, but also in terms of getting data stored, for example, and retrieved. I think that is itself is a very big cost for us. So, these are some 3-4 areas in which significantly fintech companies could help the bank. For each of our lines in which we do business, actually we have almost people coming on a daily basis to give us some improvement to the other, and these are being evaluated. We have a startup fund which has been created recently, about $30 million, where we would be investing in some of these startups where we find that there is going to be value for the bank over a period of time. And it is not only in terms of getting value out of the companies that are in which we are going to invest, but in terms of the value that the bank will get by way of improving their business lines significantly. So that is a thing that we did very recently, about a month back, in terms of creating the startup fund. And there are enough people fintech companies who are presenting their wares, and we will surely make use of them significantly as we go forward.
Okay, so my last couple of questions. In your interactions with MSMEs and SMEs and entrepreneurs, do you see sufficient knowledge about how fintech can change the industry?
There is enough knowledge to some extent, but I think there could be much more skill sets that could be given to such MSMEs in a different way. A lot of the MSMEs actually have followed a promoter model of passing down their wares from generation to generation and being in the same sort of a world that they were operating in. Some of the good inventions and the good opportunities that fintech companies throw up in a major way, I think programs such as yours should be able to get them to publicize them, and to make sure that a larger domain of MSME players are aware to all these inventions that are happening in the fintech world, and they will surely change the business model completely, they disrupt in such a way that it could be good. At times I think you need to also look at the risk angle and say that, look, does it fit my portfolio or not.
Sure. Banks like yourself also play a mentoring role when it comes to MSMEs. What advice would you have for our viewers in terms of how to work more closely with banks to have a financial mentor such as SBI?
No, I will go back to the days when I joined the bank about 35 years ago. And at that time I was told by the bank itself, we were the pioneers in SSI funding and SSI financing. And at that time we were told that we are the well-wishers, we are the guardians, we are the father figures for MSME, and all through the career in those times as well, as field officers, as a manager, SIBs, we were mentoring MSME. At that time they were called SSI units in a significant way. Today that gap is slightly widened, in the sense that the banks are not seen as enough mentors than what it was some few years back. I would still like to convey this through your channel, that we still are your friends, guides, father figures, or whatever you want to call us. We are there, and we take pride in each one of your growth in a significant way, and in whatever way we are able to help, with our experience, with our knowledge, with our solutions. And if nothing else, just give a good shoulder to be there, in your good times and bad times. So I'm sure, whatever troubles you have, I think it's better that you face it, you share it with the banks, and we are there to help you solve all of them.
Sure. What do you think is holding MSMEs back then when it comes to working more closely with banks?
I would imagine first of all, the world is changing very fast. In the time that the banker has also significantly reduced to what it was earlier, in terms of providing time, getting these customers meet and all that. So in that sense, we are in the bank renewing our role in terms of getting more and more of our officers to go and meet customers, to have customers meet, talk to them, get their The other issue is, of course, from the other side, is that the comfort for the new generation. Again, they are in a hurry to get to where they are. I think the new generation, the pass through from the older generation, hasn't been the same way that the bankers are their friends and well wishers.
All right, so thank you very much for your time and for speaking with us here on The Leaders of Tomorrow.
Thank you. It's a pleasure. Thanks.
That concludes part 2 of this very special interview with SBI, where we've spoken about financing for MSMEs. Do remember, you can write to us at leadersoftomorrow@timesgroup.com. You can reach us on social media using the hashtag LOT, or you can call us on the number flashing on your screens. Thanks so much for watching.